If you've ever been told that you can't qualify for an investment property because your tax returns don't show enough income or that you haven't filed your tax returns, this video is going to change everything for you. I'm a mortgage broker who works directly with DSCR lenders writing these types of loans every day across the country to self employed investors, to real estate agents, to business owners, to individuals who haven't filed tax returns, to W 2 borrowers who've already maxed out their conventional limit. And none of them have to show a tax return. None of them have to prove debt to income ratio. And in the next 6 minutes, I'm going to show you exactly how DSCR works and what it actually costs in 2026. And the one number that decides whether you qualify or if you don't. I'm Robert with OpenLane Funding, Spokane Valley, and let's just get into it. The DSCR stands for debt service coverage ratio. And here is the entire concept in one sentence. Instead of the lender qualifying you based on your personal income, they're going to go off of the property and its rental income. The math is simple. The DSCR equals the monthly rent divided by the property's total monthly mortgage payment, which that includes your principal, interest, taxes, insurance, and HOA. And we call that the PITA. That one single ratio determines whether the deal qualifies, not your job, not your tax returns, not your W 2s, the property. Now, most DSCR lenders want to see a 1 or higher on the ratio. Now, some do go down to 0.75, and we call that a no ratio or light doc DSCR. But you pay for it with a much higher rate. Now, here's an example. Let's say you buy a property for 400,000. Now you put 25% down, that's about 100 grand. So you're going to finance 300,000. Let's say you qualify for a rate at 5.95%. You add your taxes, your insurance, and a small HOA fee just to put it in there. Now your property, your total PITA, a monthly PITA is going to be right about 2550. Right? So let's just say the property rents out for right about 2800 a month. So you take your $2,800 and then you divide that by your monthly payment on the property with that 2550 mark, which comes out to about 1.10. That qualifies at most DSCR lenders. But at that 1.1, you're also not getting hit with a premium that comes at the ratios that are below 1. Now, if we were to push that to 1.25, meaning that the rent is actually a quarter percent higher than the payment, you're actually going to see the best pricing in the market right now, at least that the market has to offer right now. Here's what DSCR lenders actually check. They're going to check your credit, right? They want to see what's going on. What they're looking for, right? They're looking for a credit score right about 640 to 660. That's going to be the typical floor. There are options that go low, but again, you're going to pay for. You have 720, which starts to unlock the best pricing in most areas. And then you get 780 plus, you're going to start getting with the peak. You're going to get the headline sheet numbers, right? The base pricing. You're generally going to be at a down payment of 20%. That's going to be minimum on purchases, right? 25% starts getting you better rates and more flexibility on the loan. Reserves. Most lenders want to see 3 to 6 months of the PITA in your bank statement after closing. Rent comps. An appraiser determines the market rent. That is the number that the DSCR is calculated from, and not what you think that you can get for it. Now, if this is a refinance, kind of different caveat. Most lenders go off of the actual rental income on the property, unless it is much higher than the actual market rent. Then they might see some red flags and then base it off the market rent or somewhere in between. They also go off of an appraisal. They get what's called a standard 1004, which calculates the as is market rent based off of sold comps. And they go off of a 1007, which determines the market rent. Now, here's what DSCR lenders do not check, right? They're not going to go after your tax returns, your W 2s. They don't care about your debt to income ratio. They don't care about your employment history. They don't care about other rental income. They don't care if you have one property or 47 properties. And that last point, that's going to be a big one. There's no limit on DSCR. Now, Fannie Mae, they actually cap conventional investment financing at 10 properties, where DSCR, they have no caps. So let's take a quick pause as well, because if you like this type of breakdown that you wish your lender actually gave you, hit that subscribe button. I do a deep dive educational video every Wednesday. I know this one's hitting a little bit late, but it's generally going to be a Wednesday. And then every Monday and Friday, I like to do a market update video to really let everybody know where everything's sitting at and to help you give advice. You can also follow my Facebook page for daily uploads where you can kind of get a better picture as well. Hit that bell icon if you want any alerts. Now let's talk real numbers as of June 2026. Best case DSCR pricing right now. If you have a 780 plus FICO, you got 75% LTV, which means right about 25% down. Your DSCR is sitting at 1.25, and you have a 5-year prepayment penalty. That deal right now is actually pricing in the 5.8 to 6% range right now. And that is actually within about a half a point of the conventional investment loans. And the DSCR spreads have actually been compressing because their demand of the product exceeds its supply right now. What bumps the rate up? All right, a lower credit score. So about each 20 points lower adds about 10 to 25 bips onto the rate. A higher LTV, 85 or 80% cost more, and anything above 80 is actually pretty rare. And if you go lower, it's generally about every 5% down actually helps the rate get better uh, to a certain point. They can't go up below their base. DSCR below one. Expect You're going to expect right about 25 to about 75 bips on an add-on. Cash out refi versus purchase. The typically you're going to see about 25 to 50% bips higher on a cash out. And if you have no prepayment penalty, most lenders are going to charge you about 50 to 100 bips just to waive that prepayment penalty. Now, the prepayment penalty is also where a lot of investors mess up, right? If you're holding a property for 5+ years, take the prepayment penalty and save the rate. Now, if you're planning to refinance in 18 months, pay for the no prepayment option. Now, to really talk about that too, there are different levels of prepayment penalty, right? To be blunt, the rates aren't going to change. The appreciation in real estate is not really going to change. So if you're buying for appreciation, don't expect much, right? So it's probably best right now to hold a property for 24 to about 36 months, 2 to 3 years, right? Now, there are prepayment options, so you can go in a 2, 3, 4, 5, right? So that you can actually pay maybe slightly higher of an interest rate. And then in 3 years, you can refinance. The math, it almost always works out if you just think about your steps and pre plan these kind of movements. Now, there are three different types of investor profiles where DSCR is almost always the right answer. We'll really hit four, right? One, the self employed investor. If you write enough off your tax returns and your AGI doesn't qualify you on paper, but you're actually making good money, DSCR doesn't care, right? Your tax strategy stays intact. So you can stay, you know, not paying as much to the man. We'll say that. Two, portfolio investors past the 10 property limit. Fannie Mae's 10 finance property cap, it's a really hard ceiling. Now, once you hit it, conventional loans, they won't fund you on another rental. They won't hit you on another primary. You're just capped. Now, your DSCR becomes the only path forward. Three, foreign nationals and LLC buyers. DSCR funds in entity names. That's pretty much it. You can close a property in your LLC on day one. There's no seasoning on these LLCs. You don't have to do warranty deed the whole warranty deed transfer dance or quick claim dance. There's no due on sale risk. For foreign investors who don't have U.S. tax history but have an ITIN the DSCR is often the only product that works for you. And I'm going to hit on a fourth one. If you haven't filed your taxes, individuals, there's people out there who, something happens and you fall behind. I was, partial to that as well. I got hit with a much higher tax rate on one year and I didn't file for 4 or 5 years because of that snowball effect, right? If you fall into that, and you want to buy an investment property, you can still get DSCR financing. And here's the bottom line, right? If you're an investor who actually makes money and you can't make the numbers work on a conventional application, the DSCR programs, they're built for you, right? The property qualifies. You don't. If you want to know whether your specific situation pencils in, I'll do a free qualification check. Give me a call, shoot me a text, 208-215-9936. If you comment DSCR below, I'll send you my one page of DSCR qualification calculator so that you can run the math by yourself without having to talk to me. I'm Robert with OpenLane Funding. I'm going to see everybody on Friday with a pre FOMC briefing. Thank you, everyone. Have a great rest of your day.